All right. So we pushed down a little bit below the intraday implied move, kind of bounced back up a little bit of mean reversion towards gamma neutral on the weekly, which is now up here after the intraday price action. Oh, did that fucking fail again? Hold on. There we go. I guess we'll see if gamma neutral continues to march up, especially the monthly gamma neutral as we approach Friday's expiration. That's going to be pretty bearish. Having support kind of fall out below spot is a lot of what's helping this drag down. So we'll see if that continues. Today was the first day of SLD, so we still have tomorrow, Friday, Monday morning. So we'll see how that goes. ES pulled back above 69.63, which is an important confirm to the downside. Obviously, that opened. Well, we almost got a test at 69.17. We bounced a little higher, like 69.23, but we did close back over that, so should be moderately stable going into the overnight session. I would say if we fall back under it, you know, we maybe dip back towards like the 69.36 level. But right now it looks pretty good. And this could be like a retest of the failed like 69.94 level. If we don't retest that and this fails before confirming the reversal, then that opens up the next leg down, which is like 68.67. So we'll keep an eye on that, I guess, in the overnight and see where we end up tomorrow. Dollar pulled back a little bit today after the gains over the last, well, couple of weeks. Last week into this week. Yields at the top end of the curve coming down pretty sharply, both the 30, 20, and the 10. But yields at the front end of the curve still moving up. Yesterday, there was a big bump in the 3. Today, little bumps in the 3 and the 6, which will kind of be important once we get over to once we get over to talking about the SOFR IORB spread. Commodities moving up again today. Oil took a big hit on the news that Trump's not planning any kind of retaliation in Iran, pulled back to $60 a barrel. But silver continued its rocket up, 7% today, and gold holding above 4,600, up 83 points on the day. Copper up as well. So commodities still outperforming to the upside. Obviously, as we near a cycle, we could probably see a lot more of that. It's been a very long time since we've had a strong commodities market, and it does appear to be strengthening. Like over the long term, you would expect this to kind of play out because this is just like from 2014 to 2022, and then this is kind of like a cup and handle. Kind of follows a lot of U.S. fiscal policy decisions as well, so it's pretty interesting. It probably has a lot of upside potential still. Correlation pulled back pretty sharply into the end of the day on both the 1 and the 3 month, but they didn't pull back quite as hard as they popped earlier. So correlation for both still up on the day. 1 month correlation up 7%. So a little bit of breakdown and dispersion. We should start to see more of that as we get closer to the leap earnings and more people exit those equity long positions. Core 3 months still up. Bond volatility not moving up much, but maybe a little bit with today's bond buying. So maybe a little bit of rotation, equities to bonds. I think SPX closed down about 53 points, NQ down about 100. Over here, carry trade pulled back a little today, back from the all-time high it set yesterday. However, the short end of the trade is starting to pick up quite a lot of interest, and it continued to rise. Forward yield on volatility at negative 11.42%, which seems very much out of line with where we see VIX on the cash VIX. and more in line with like VIX at 14 or 13. And so that's kind of interesting. That the forward yield on volatility is so trimmed. I would expect that we'll probably see that pick up, because the arbitrage opportunity there is getting kind of crazy, but that'll also probably promulgate like a move in bonds. So I don't know. Just watch that. Down here, yeah, the continued push up in silver is driving a lot of profit out of the carry. So leverage is increasing, but profit's declining. And the cumulative cost to carry is now at negative 16.73%, which is starting to get pretty close to like the year over year returns on the SPX, which are at about 20, I think about 20%. Well, I think about 16% where we're at now since like start of 2025. Skew continued to move up. Breadth starting to pull back a little. 50-day movers still way ahead of 200-day, which makes me think that as that collapses, we'll start to see that move a little bit faster. But we are seeing the 30 stocks above their 20-day moving average are starting to fall below stocks above their 200-day moving average. So the weaker components that had gained some ground since like Jan 7 are starting to pull back now. Not enough yet to confirm anything, but a little. Not much of a change in Fed fund futures. The 10-2 dropped a bit. And we are seeing SOFR tick back up, now flat with IORB in the overnight, and SOFR futures still pretty flat around 3.68, so about a 3-point spread there. Activity on the standing repo facilities is still pretty low. However, tomorrow and Friday and Monday morning, that cash demand should pick up a bit. And now that we're past the end of the year, monitoring how much that pushes the spread apart is going to be pretty important for end of month to give us kind of a gauge of what liquidity is going to look like as we approach like a situation where there's significantly more cash demand. Still getting a lot of vol shorts coming in. Correlation still declining on VX, between VX and cash VX, down to 81.94% or 95%. So people still shorting vol. It was very advantageous too at the lows today. But leverage starting to pick up on falling prices, and so we might be starting to see some put buyers come in here. And we'll get a better view of that tonight with the options macro update. Sell volume significantly higher today than it was yesterday. And then out here, obviously we tested the 20-day moving average, kind of bounced off of it before getting down to the 68.82 level, which isn't that important, but it was like the high for November. However, retesting the failed trend, should we do that, which is like, a little bit below where we closed, but tomorrow probably around like 69.45. If we retest the failed trend and then continue down, that would be very bad for buyers in this area, and they would likely collapse, and that opens a move down to the 50-day MA, which is down at like 68.25. Pretty far from spot. So I think that covers just about everything. Thank you guys for tuning in. I will catch you later. Peace.